So how much can you afford? I know this seems like a pretty straightforward answer, but it's not. There's definitely a few things that you need to consider to make sure that you're not house poor. So watch this video to learn more. Now, first, let's talk about what you'd qualify for. This isn't what you'd afford. This is what you qualify for from a mortgage perspective. So the rule that we normally use is that payments can't exceed 43% of your gross income. Now for payment, this isn't just the mortgage payment and the taxes and insurance. This is everything. So think car loans, student loans, credit cards, even loans for jet skis. And also the income is based off your gross income. So that's before taxes, your insurance, your 401k, everything goes out. So for example, if you're making $84,000 a year, we take your monthly income of $7,000 and then take all your debts and divide that $7,000 by all your debts. And as long as it doesn't exceed 43%, you'd be good. And you'll hear this referred to as the debt to income ratio, or DTI. So keep in mind, the way we calculate income is not always the same as what you think it is, and especially for self-employed borrowers. So you want to make sure you watch my video on getting approved as a self-employed borrower to learn more about that. Now, more important is how much would you afford? Now, I know you're saying, wait, didn't you just tell me that? No, that's how much you'd qualify for from a mortgage standpoint. That's not necessarily how much you'd want to spend. And the reason is when we're qualifying you, those are the only things you're required to pay. There's a lot of other expenses that you're going to have in life that you're not necessarily going to be as far as your mortgage qualification. And this can be things like you eat out a lot, you got to go on vacations, you're saving up for college, or your childcare. None of those things are going to count towards your mortgage qualification, but they're still cost to you. So you want to factor that in when figuring out how much you can afford. And a great example of this is I had clients that had kids in private school, and that was pretty expensive, but they weren't adding that into their cost for when they qualified till I brought that up. And then they realized they were way over budgeted and wouldn't be able to afford the schools that the kids are at if they went for that house. So we were able to stop that early before they became house poor. Now, a good rule of thumb is you want to look at your payments and not exceed 36% of your total income. And I know that seems low, but once again, we're not accounting for things like your 401k, your insurance, and the taxes that come out of that. So you always want to be a little bit on the lower number to make sure you have enough for everything else. But even better than that is doing a budget. Now, the most simple way to do this is to look at either rent or housing payment right now and then figure out where the extra money would come from for the new housing payment. But it's even better to go line by line. There's tons of information out on the internet and free budget tools that will help you really analyze this and make sure the new mortgage payment is going to work for you. And lastly, you want to make sure that you have money set aside for emergency funds. So what if you lost your job? You want to keep making that mortgage payment, because if your house gets foreclosed on, you lose all the equity that you have. And also, especially if you're coming from renting, you're not going to be responsible for maintenance or repairs. So you always want to have some money set aside for those items, because you never know what's going to pop up. Now, we do always recommend that you get a homeowner's warranty your first year, because that's going to help protect you from major shocks and help you also budget for that year to figure out how much the maintenance is going to be going forward. Now, with all that being said, every scenario is different. Everyone I talk to has different stories, different goals, different income. So what you can do is contact me for a free mortgage consultation, and we can go over your exact scenario and figure out the best price range for you. And I hope that helps give you basic information of what you can afford. And if this video is helpful, make sure you like and subscribe to my channel to learn more.